Hello, this is Leslie Juflis with Trading Live Online, and I've been working on some charts and thought I'd do a quick video on them. Of course, everybody I'm sure that's watching this video would know that we've had a very sharp move to the downside recently, and all of the indexes. Um, we're going to take a look at some of the retracement levels that we might be able to use to project some downside price levels to watch for support and maybe even some potential turning points. Any moves to the upside at this point in time, this is March 11th, 2020, the up move should be short lived, although they will probably look like very real rallies. Generally, in this type of market environment, they tend to be false moves to the upside. The Fibonacci retracements, I'm going to show you something interesting that you might be able to incorporate into your own work, something that I called backwards Fibonacci numbers. And we will take a look at a couple of those so you can get an idea of what those are. First of all, down here, this point number 3, we're going to take a look at the difference of the slope and angle between the 2018 decline and this current decline. So let me click on this chart, make it a little bit bigger. I hope that you can see it okay. So we're going back to, we can actually see some of 2012 here, and you can see down at the bottom left of the chart, the 2013 upside breakout is marked. The lows of 2016, the breakout to the upside 2016, the December 2018 lows, June 2019 lows, and so on. Okay, so over here, just above the December 2018 low, you'll see an angled blue line. So I just took the line from the top, dragged it down to the bottom to get that slope and angle. I then just cloned the line and dropped it over on the top right of the chart of the prices, dropped it over to compare the slope and the angle. And it's very easy to see at first glance that this current decline is incredibly steep. It's very sharp and steep, and we're seeing this even on the weekly chart. The daily charts, you can see a few little bounces in them, but not anything substantial yet on the daily charts. So as I mentioned in the opening, when you're in this type of environment, the rallies to the upside, we haven't seen a rally yet on the weekly chart, the rallies to the upside tend to be very convincing that the downside is over. But if you look down to the bottom of this chart, you're going to see just a couple of indicators that I have on here. One is the RSI Relative Strength indicator, and that's had a divergence, is turned to the downside, and this here has more room to the downside. It may, before coming all the way down, it may get a little correction up and then maybe dip back down. I don't know for sure, but I'm going to watch to see if that might happen because the market is getting into a very oversold condition at this point. I have a MACD on below the RSI, and you can see the extreme levels, the momentum to the downside with this. So we'll watch this for a bit of a correction, possibly to the upside. We're going to see it first on the daily charts, correction to the upside, and from there what I'll be watching for are particular types of patterns, ABCD patterns, maybe a triangle type of a consolidation, could be a rectangle, but some sort of pause in this very severe decline. Now let's take a look at some of the Fibonacci levels that are marked in here. If you look up where it's marked at the June 2019 lows, you'll see this red 618. I'm sorry that's not larger if you can't see it, but just I think you'll be able to find it regardless. The price right here is stalling at that 618, but let me point something out to you. look at the way I have, first of all, the retracement on from the low of the December to the high of the 2020 high. And I'm also using a retracement from these 2016 lows. And I'm also using retracement from the breakout point of the 2013 breakout. You can see there is a strong bar. This is a weekly bar again, and then breakout to the upside. Um, and I think that these are the Fibonacci retracements I want to be using right now, and I'll show you why. First of all, where this 382 was, these bars just really came pummeling down through them. They just sliced right through them. The 0.50 got a little bit, and I'm sorry that it may not be as visible on the chart, but you can go to your own charts, the weekly, and you'll see it. At the 0.50, there was a bit of a move to the upside and then back down. And now at this 618, it's just sort of hovering. I do think that this low here will break eventually and the market will be going lower. We may get a bit of a pause before it does that. But here, the important thing on this is that when you see bars coming through Fibonacci retracement levels that do not hold as support and they just keep going, when the market retests back, generally they'll come back to around those levels that they broke, and those levels will now be acting as resistance point. So if you go and you can find this 0.50 retracement here from the December 2018 low to the 2020 high, and you see that first move to the downside, you'll see that that next bar came up to that 382, which held as a resistance area, and then more downside from there. Okay, here I've got a circle here, and there's a clustering of prices, Fibonacci level prices here, and also at a point where the market is, I was trying to see if I could widen that, and it's not going to widen for us. But the market here at this level had a very sharp decline and then a move back up. So that's coming back into around the beginning of that up move. So we may be seeing, if the market declines further, we may be seeing a test and a reaction to the upside from the 2410-ish to 2440-ish area in that range. And from there, there's also a 1 to 7 on there. If we take where this June low is up to this high and extend it down, there's a 127. So we have a number of Fibonacci levels coming in to this area. Now, I don't know if the market's going to get here. All I do with my analysis is look and see where the market might come to. For those of you that saw my interview on stock charts on, let's see, that was on February 19th, just a couple of days before this drop occurred, you'll see the type of analysis that I do, and it was certainly pointing to a downside. Now, how this is not anything that I can project. All I do is I follow the price action as it unfolds and look at some momentum indicators and do the work from there. So all I'm doing here is looking at where some areas may come in as support. But I do think at this point, March 11, 2020, that we are getting to a very oversold area, and I think that we are getting close to seeing some sort of a bounce to the upside, and whether it's from the current levels that were right here or it wants to come a bit lower, and then like this, or the June here, maybe break this and then come down to one of these retracements back up. and then see if we get another move back down towards these areas. Now, if these December lows break, let's take a look at where price might go from there. So from here, this retracement low that's on, from low to high, and then it's giving us a retracement, and then from there we start to get the extensions like this 1.27. There's an 886 clustered with it, and we're close to that 2016 upside breakout. These might be areas as well to watch to the downside. Before this 127 here, you can see there's a 0.618 and 0.786 retracement coming in using the 2016 low up to the 2020 high. That's where I'm getting that retracement from. So again, I don't think anybody knows exactly what price level the market will go to, uh, but you can certainly do some analysis of where it may be going and then follow the price action with that. So that's it for this update. I hope everybody's doing fine with these market conditions, and feel free to visit me at tradingliveonline.com.